Hello, I've just started my channel and I'll be making my first video here on why the economy will crash. I've prepared a slideshow and this is how I intend to make my videos. Hopefully you like it. So this video is called Why the Economy Will Crash and the stock market beforehand. So my key points is first private sector debt, then M1 and M2 money supply, inflation, overvalued stock market, and I'll talk about why recessions are actually good, and I'll talk about the political landscape and how it's actually changed, and then I'll talk about what just the overall causes are and the solutions. So one cause of every recession, most recessions, is too much private sector debt. And so with our Western economies, we simply have too much private sector debt. The United States has 150% private sector debt to GDP, where France is 200%. And with all of these democratically socialist countries like Norway, Sweden, Denmark, you have 300% private sector debt to GDP. And so whenever leftist says, oh, we should have democratic socialism like these countries, just point out that these countries are financially unsustainable, because look, 300%, that's unsustainable. And in those countries, household debt, which is mortgages, that's 180% of a private sector debt, which is basically ridiculous. So all of these normies, all of these peasants, they have to, okay, well, I mean, they're not peasants, but they have to pay huge amounts of money for the mortgages for their homes because of, well, corporatism. And yeah, about the financial sector debt, if you look at the graph below there, you see that 40% is household debt, which is mortgages, 40% is financial sector, and then 20% is the non-financial businesses like McDonald's, Apple, Microsoft, blah blah blah. But when I say that 40% is financial sector, that's actually quite a lie, because the financial sector is basically responsible for 80% of the private sector debt. And I ask here rhetorically, what happens if the debt can't be repaid? Well, what happens is that most of the assets in our economy just disappear because the debts are defaulted on. M1 and M2 money supply. So for asset bubbles to grow, generally the money supply has to grow, so more money goes into asset bubbles, so then the asset bubble expands. And down here I have a graph of M1 and M2 money supply. Yeah, so if you look at the M1 and M2 money supply, what you see here is that over time it increases, and with the pandemic, the money supply for the M1 just shoots up. And for some reason the M2's money supply goes down a lot. I don't know why, I think it's an anomaly, but the point is that for the economy to grow, money supply does have to expand. And if you look really closely, I know you can't see it, but from in June 2021, the M1 and M2 money supply didn't expand, and in July the stock market barely expanded. So yeah, if it's true that the money supply is no longer expanding, which I don't know, because the St. Louis Fed no longer publishes the statistics on the money supply, then that means the bubbles can they can no longer expand, and so ultimately the economy, well, all of these asset bubbles are just going to crash. So about inflation, yeah, it's quite unclear what would happen with inflation, because there's surprisingly little inflation as of now. But If you look at monetary growth minus GDP growth and you compare it against inflation, what you see is that the two lines are almost identical. And so inflation basically equals monetary growth minus GDP growth. But you may notice that in 2019, 2020, the monetary growth just expands astronomically. And inflation, as of now, has not expanded much. But I think a lot of money will start to leak into the real economy, and there may be a lot of inflation. And the reason why inflation is bad is because too much inflation. Um, okay, I've got 5 minutes. Too much inflation um, results in real profits diminishing, as real profits are uncalculatable. Because, yeah, sure, nominally, you may be able to make your profit. You may be able to make as much revenue nominally, but in real terms, that may be less. And also, to quote Milton Friedman, and this is me paraphrasing, even if real wages, even if real wages increase with inflation, everyone is just put into higher tax brackets. And so ultimately, people are going to have less money to spend, so corporations will make less money because there's less, well, yeah, people have less money to spend on goods and services, so corporations have less income, and, the economy does worse. And of course, people are going to be putting their money either into bonds or into gold overall. So, if you look at the stock market closely, you see that before the COVID pandemic, the stock market was high enough as it was, but now, because of Fed intervention, the stock market is 50% higher than it was before. And this is crazy. And I think the stock market is just massively overvalued. The average PE ratio is 30 times. And again, we've had the longest economic expansion in history. In July 2021, the stock market has barely expanded at all. And it does make you think, is the stock market stagnating? Um, and yeah, I think so, because there's just no more steam, there's no more juice to go into the market. Um, yeah, and also many tech companies, not just average companies, but tech companies, they're 2 times, if not 3 times bigger than they were before COVID-19. But the thing is, people say recessions are bad. I think recessions are brilliant because recessions are healthy, and it just results in all of the malinvestment, all of the crap being flushed out of the economy. Before the Federal Reserve was created in 1911, um, the markets were a lot closer to equilibrium. When a recession happened, the economy would recover in like in about 2 years. And of course, in 2007, 2008, the economy did recover in 2 years, but that's only because they took on more private sector debt, which is unsustainable. And also, one of the bad things about economic boom is that during economic expansion, houses are more unaffordable. But when the market crashes, on the bright side, property is more affordable. And actually, if you want to buy a house, wait till the economy crashes, and then you would be in a good position. And also, recessions tend to make it easier for people to. It makes it easier for everyone in the political sphere to restructure the economy to make it more sustainable. So, do you ever feel like you keep hearing the phrase the neoliberal world order? I think that's kind of ridiculous because we've never had neoliberalism since like the 80s and the 90s. And all neoliberalism is, it's not corporatism, it's not the globo homo globalism. All neoliberalism is free market capitalism, pioneered by Milton Friedman and Friedrich Hayek. In the end of the 90s, and basically since 9/11, neoliberalism quietly disappeared, and central banking corporatism took its place. And if you look at the Yeah, sorry. If you look at housing prices since 2000, what you see is that it just increases astronomically. And again, in the 80s and the 90s, when neoliberalism actually happened, house prices barely increased. But in the 2000s, oh look, house prices increased astronomically. And so it's not neoliberalism that is a problem. Neoliberalism is just free market capitalism. And oh look, yeah, let central banking happen in 2000s. Oh look, the house prices go up. So what are the overall causes? Well, it's credit expansion. 97% of the money created in today's economy is money that has been printed out of thin air by the banks for the sole purpose of lending to other banks. And again, how is this done? Well, it's an accounting manipulation. That's what it is. And most of the money that the banks lend is money lended to other banks, and that money is used for speculating in housing and the stock market. There's also quantitative easing. There's also fractional reserve banking. With fractional reserve banking, even if the money supply doesn't increase, assets and liabilities can increase up to 10 times, which is problematic, of course. And by the way, if those assets cannot be repaid because the banks default on their loans, that means other banks have less assets, and all of the assets in the economy, it just disappears. We've also had artificially low interest rates, and what that means is that basically money is cheaper. People can borrow more money to speculate on these assets. And a lot of these people on the left, they say, oh, there's lack of regulation. No, there's not. Because statistically speaking, the regulations has increased over time, and increasing regulation doesn't change the fact that the macroeconomy is overvalued. The macroeconomy has too much private sector debt because there's too much speculating. And again, regulation doesn't change that. You have to look at macroeconomics. So what are the solutions? Well, what I want is to ban credit expansion altogether and have only money being printed by the government for the sole purpose of universal basic income. I believe in more government debt and less private debt. If you want the private sector to have a surplus, the government must have a deficit. And if the government has a surplus, the private sector can only grow if it accumulates more private sector debt, in which most people in the private sector are doing better only because they are stealing from the banks in terms of private sector debt. And private sector debt is unsustainable. I also believe that there should be no more quantitative easing. I believe that there should also be no more low rates by the Fed. Thank you for listening, and of course, praise the market.